Rob Polia Properties at Keller Williams Realty, and it is the first week in October, and so you know what that means. It is time for the newest edition of the Real Estate Show, where we dive into what is happening in the Middle Tennessee real estate market with up-to-date stats. Now that we've got some stats for last month to look at, so let's go ahead and dive right in. And before we even look at market stats, I would be remiss if I didn't share with y'all. And that's because we have seen mortgage rates continue to climb here over the last probably about 2 months, 2 to 3 to 6 months, really. And we're going to show you some numbers in a second. But if you go back and if you've watched any of my videos for any length of time, you have seen and heard me say that at the beginning of the year, that people were getting used to mortgage rates, that they were kind of normalizing in the minds of the consumer. Like think back to maybe beginning of this year, quarter 1. You can even see right here some of the numbers where at the beginning of the year they dipped back down to the low sixes. They had peaked in the high sixes, come back down. Like right around here, people were used to rates being in the mid sixes, give or take about a quarter of a point. It was causing buyers to get back into the market because they had gotten used to what that payment might look like. That has changed pretty significantly, and we're going to use this as a springboard to talk about the market here locally, as well as to go into three things that I believe every homeowner and potential home seller should be doing to get ready for this market. Um, and so anyway, let's just look at some numbers real quick before we look at the local stats. So you can see the beginning, and I'm just going back about 6 months because it's what October 3rd as I'm recording this. Thursday, April 6th, 30-year fixed rate, the average was 6.28%. That's the blue line right here. In 6 months, it has gone up over 1%. So this is on FreddieMac.com if you want to check it out. So over 7%, over 7.3%. You might be thinking, like, what does this mean for me as a homeowner? Like, Rob, why do I care? I have my mortgage already. Why do I care that rates have gone from the low sixes to the low sevens, or honestly, for a lot of buyers, most buyers, it's not the low sevens, it's the mid to upper sevens, depending on credit score and a number of other factors. Well, here's why. I've got pulled up here with the mortgage calculator. In fact, let's start at 6.5%. So this right here, I'm not going to change anything aside from interest rate to really demonstrate what a 1% change in rates does. So here's a $600,000 home, 20% down. We're just keeping it super simple and straightforward here. So somebody's putting 20% down on a $600,000 home, 6.5% rate. I've removed taxes and insurance from this equation just so you can see it's principal and interest that we're talking about. They have a payment of a little more than 3,000 a month, 3,033 a month, on just a 6.5% rate, 20% down, $600,000 mortgage, 30-year fixed. Change that to 7.5. So 1% change. That's what we've seen over the last 6 months. A 1% change, right? Let's see what the payment does. So again, nothing else has changed. $3,350. So it has gone up by a little more, basically 10%, with that 1% change. Now let's keep that going for a second. Let me show you what an 8.5% rate. So remember, we were at 33.50 a second ago. Now all of a sudden we're at 36.90. So that went up another 10%. You might be wondering, like, why does this matter if I'm a homeowner and I'm a home seller? Why does this affect the market? The reality is that home buyers don't look at a house price. Like, they do, don't get me wrong. Like, they are looking at pricing, but this number that I've highlighted on the screen, this monthly payment, that's what a home buyer cares about. A home buyer, yeah, I can't think of. I mean, at least a home buyer getting a mortgage. I've gone back over the last week or so, just really trying to rack my brain and think, when is the last time I had a buyer who was getting a mortgage not care about this number, but care about sales price? And I couldn't think of one, because the reality is that big purchase, like, they don't care if they're paying 200,000 or $1 million or more or less, for a home. They care about what this number is. So if you're a home seller in this market, or a homeowner that's a potential home seller, maybe you're thinking about moving and you're like, Rob, what's going on in the market? Like, just know before we even dive into any of these stats that interest rate fluctuations impact the market at such a great deal. Because just think back to what we were talking about a second ago, the 1% change in rates. And here, I'll just go back to 6.5%. Somebody who was shopping for a home in, let's just say, early April this year. Someone who was shopping for a home at that point, they were pre-approved. They were thinking they were going to pay $3,000 a month for that home. Now, and that's what 20% down and all the above. And maybe that was the high end. Maybe they're currently paying $2,000 a month because they have a 3% rate on their mortgage and it's a lower balance, etc. and they were like, well, they'll stretch to 3. Now all of a sudden, with payments, with interest rates being at what they are, and let's just go up 1% from there. Now all of a sudden, that stretching to 3 is having to stretch an additional 10% on that payment. And it's causing a lot of buyers to kind of either push pause or to say, well, instead of looking for a $600,000 home, let's look at a 550. We're still going to put 20% down. We're still going to pay attention to all that. And now all of a sudden, all right, we're closer to, to 3 grand, and it's just causes people to kind of take a step back and say, hey, let's reevaluate our purchase price in order to keep this number, that again, that highlighted monthly payment number, kind of where they want it to be. So I hope that makes sense. And it's an unknown for our market. I mean, it's just the reality of it. Like I can't tell you how many quote unquote experts that are out there had said at the beginning of this year or at the end of last year that we would see rates in the fives right now. If you've paid attention to any of my content, I've never been one to predict interest rates because we just don't know. We don't know what rates are going to do. We hope they go down because it helps buyers, and honestly, it helps sellers too. It helps everybody, and yet we just don't know what they're going to do long term. But how has this affected the market? So again, in the last 6 months, rates have gone up 1%. Well, how has this affected the market? Let's dive right in. I've got pulled up here Davidson County. Now, you would think that homes being a little less affordable because of that rise in rates, that's had an adverse effect on our market, and yet we haven't necessarily seen that yet, at least at most price points. Now, I'll expand on that here in just a moment. And yet, and the reality is, this is just all of Davidson County, and I could pull up any county here, and we're going to see very similar numbers as we continue to look. But Davidson County, the amount of homes for sale in September, you can see it's continuing to trail down. It kind of peaked at the beginning of the year, middle of the year in June, and it's continuing to trend down. Homes for sale 3,300. It's down 21% year over year. New listings is doing the same thing. 1,100 new listings hit the market last month, I should say. That's 25% less than what we saw last year. Months of supply, while that's up a little bit, you can see it was trending upward because remember last year, beginning of 2022, and I know we got to think back 18 to 24 months ago to see this market of 21 to 22. That was that low interest rate, insanely low interest rate, like frenzied buyer market of 25 offers in 25 minutes type of thing. That hopefully we never see again because it was just way, way, way too extreme of a market. So it's kind of it was normalizing, and now it's going already dipping back down because there's just no inventory out there, no new listings. If when we see a decrease every single month in listings and new homes for sale, that's impacting the market. But here's the thing: because it's low inventory, it's causing home prices to still rise. So you can see the median sales price, and here's an interesting number I want to point out. But you can see the average sales price in Davidson County, and remember, average is always going to be a little higher because you have numbers up top that are skewing and pulling it up. The average sales price 650, 656 here for Davidson County last month, but the median quite a bit lower, 463,000. You can see the median sales price has only gone up 5.2%. So meaning the bulk, to me at least, this is what it means. The bulk of the homes are selling in the lower price point for our counties here locally. I think it's important to bring that up and to point that out. And again, a big driving factor for it is this. Because if somebody was again say pre-approved for 600 before, now all of a sudden they're looking at 550. Maybe they're looking at, let's see, what would we have to be at to get a $3,000 a month payment at 20% down and keep everything else the same? I could put 100%. There we go, 20% down. I mean, that's right here. I mean, right around 525. Probably, I can keep plugging in numbers, but I would guess around 535, 540 would put us right at 3,000 a month, similar to what we would have been at 600,000 at a 6.5% rate. And so you can see that's a 10% drop. It's just important to bring up because I think there's three things that all homeowners and potential home sellers must do in this market to get ready if they're thinking of moving. If you're not thinking of moving and you just want to keep your finger on the pulse of the market, thank you for watching and getting this far into the video. But if you're thinking of moving and you want to just kind of get ready for it, I'm going to go over three things real quick that you need to do to get ready to make that move. The first thing you need to do is honestly, you need to temper your expectations. Remember what I just showed in terms of months of supply. So again, we're not in this market anymore. This market of late 21, early 22, and who knows? I mean, it's dropping so significantly and so quickly, the amount of months of supply. We might be there next year, unless something changes, unless there's some major economic event happens and it spurs more homes to hit the market to where we get everything flipped on its head and it becomes a little bit more of a buyer's market. We might get back here. Who knows? And yet it's not the 21, 22 market. And honestly, I don't think we're going to get back there ever again unless we have that shortage of homes for sale coupled with the low interest rates. And I did a video last month, within the last month or two. You can go back on my YouTube channel and find it, where we talked about the four types of markets. And that market we were in was a low supply, high demand market. Whereas right now we're in kind of a low supply, lower demand market. Until we get back to that low supply, high demand market, we won't be in that 21, 22 market. We're not going to be in this. And so just keep that in mind, temper your expectations, and know what we're working through right now in terms of the real estate market. So that's number one, temper your expectations. Number two, price it right from the start and make adjustments. And here's what I mean by that. Just go back, just take a look at this for a minute. Let's see where rates are right now. Again, 7.3%. Let's look right here. July 20 of 23. So not even 3 months ago, 2.5 months ago, at the time it's recording, 6.78%. So more than a half a percent jump in less than 3 months from July 20 through today, right? Why does that matter? Well, again, just going back to this equation, we just saw a 1% change in rates impacted somebody's payment and shopping price and purchase price by 10%. Well, that half a percent change then would be about a 5% change in payment and shopping price and what they're looking for. Reason for sharing that is, let's just say hypothetically, you and I, we sat down, we were ready to sell your property, and it's July 20th, 2023. Rates are set at 6.78%. We're talking about things. We're saying, hey, we're going to be able to get you X dollars for that home. Like, based on the comps, we're seeing X dollars, whatever that X number is what we're thinking we're going to be able to get for that property, right? Well, say it takes you a few weeks to get everything ready. We get our pictures made. Maybe you had some travel in there. I mean, things happen, and it's 3 months later, and all of a sudden it's 7.3% is the interest rate. While we can still try things at X percent, the X percent, excuse me, X price, the reality is that X price is probably going to be about 5% too high, maybe even a little bit more than that, because of what rates have done and because of how that's affected affordability. So make sure to price it right from the start, because even if you were good with X number right here, we might need to change it right here and make adjustments as we go, because we're talking about things here on October 3rd. If we revisited this in 2 weeks, say interest rates continue to rise, I mean, they've risen pretty substantially over the last month. On September 3rd, they were 7.12, 7.31 here right now. So in less than a month, they've gone up almost a quarter of a percent. A quarter of a percent, that's about 2.5% for affordability for a homeowner. Now, again, typically rates don't impact pricing that quickly, but it does over the long term here, over the 6 months, over the 3 months to 6 months to 12 months, it does impact it there. But my point being that you might need to make adjustments as we go, especially if economic factors don't play into our favor in terms of selling a property. Um, and the third thing to think about. So again, number one is temper your expectations. Number two is price it right from the start and make adjustments. And then the third thing to think about here, as we finish up today's video, is just understand that this market is fluid. And what I mean by that is that there are almost any other market that's out there in terms of buying a good. Because as much as we love homes and we like to think about homes as something personable and something that we raise our families in, and trust me, I get it completely. The reality is, it's still a good. It's like a good, like goods and services, right? It's still a good. Our homes are. And so in terms of goods, it's probably the most fluid market that I can think of. Meaning, even if you were, say, buying a car, while there's going to be used inventory that goes on the market all the time, if you're looking to buy a brand new truck, you've got a set number of options. You've got all the car manufacturers out there that manufacture trucks. You've got the different options of four-wheel drive, two-wheel drive, full-size truck, smaller truck, a diesel truck, all the above, right? You've got all those options, and it might sound like a lot, and yet it's a finite number. You don't have an infinite number of options out there to select from. On the flip side of that, because housing, while most people don't buy new homes to begin with, because housing is all ever changing, the reality is that it's a fluid market. I mean, what's out there today is going to change in 3 months, in 3 days, in 3 weeks. And so because of that, we constantly have to make adjustments and figure things out as we go. Because like there might be somebody who's looking to sell a home, and say you're let me restart that sentence. Like let's just say you're looking to sell your home and somebody down the street from you has their home for sale for $600,000. And they've had their home for sale for a month or two. They've been riding this wave of rising interest rates, and it's just taking a minute for their home to sell. Um, and you say, well, my home's a twin to that home. Same finishes, same size, same criteria, same everything. So you price it at $600,000. Well, the reality is that person has had the pain of being on the market for 2 months. They might take an offer for 550 because they're ready to sell it because they see they're not getting 600. And so all of a sudden, once that happens, that's telling the buying market, wait a minute, that home's worth 550, and now all of a sudden your home might be worth 550. So understand the market's fluid, it's ever changing. The same housing price rules that have graced us over the last decade with rising prices and great inflation in real estate, it's also helping impact things on a smaller scale here too because of rates. Now again, if rates change, and all bets are off in terms of next year what the market's going to do, as rates change, it's going to impact our market. If you have a question about what this looks like for you, give me a call. If you're seeing this in your email, hit that reply button. If you're seeing this on social or on YouTube, leave a comment. Happy to help however I can. You can also give me a call, 615-238-7578. As always, y'all, it's Rob Folia, Folia Properties at Keller Williams. I appreciate y'all checking this out. And until next time, we'll talk to you soon.